1st of February, all eyes will be here. What Finance Minister Nirmala Sitharaman says on taxes, subsidies, growth, education, health, crypto, global factors and domestic recovery, every word will be crucial, every word will be analysed. But don't worry, Moneycontrol got your back. Our team will be interpreting every aspect of Budget 2023 and how it impacts your life. What's becoming more affordable? What's becoming more expensive? What are the stock recommendations and expert views? Real-time, minute-by-minute coverage. Hop onto Moneycontrol to have it all. Moneycontrol, the only digital channel to non-stop live stream budget coverage for over 12 hours. Join our experts, analysts and editors from 7:30 a.m. onwards on the 1st of February. Think budget, think Moneycontrol.
Hello and welcome to Morning Trade with Moneycontrol. I'm Karunya Rao and I'm here to help you navigate the trading day with actionable strategies, sectoral trends and most importantly, your queries during the show. So please keep those comments coming. We'll address them towards the latter half of the show. But let's kickstart and take a look at what the global handover looks like. Wall Street closes a winning week led by the tech-heavy Nasdaq. All eyes now on the two-day Fed meet which gets underway on Tuesday. Stocks in Asia Pacific trade mixed as markets reopen after the Lunar New Year holiday. The SGX Nifty signals a higher start for the Indian market. How will the street react to Adani's? How will the IPO for Adani, FPO for Adani Enterprises be received on day 3? IHC has announced that it will be investing around $400 million in the company's FPO. So we'll see how that pans out. And of course, along with that, we also have some result candidates in the spotlight. The likes of L&T, Tech Mahindra, and of course, some news flow coming in for Ultratech Cement. So let's touch base with the first guest for the day. We have Hemang Jani joining us from Motilal Oswal. Good morning, Hemang, and thanks for taking time out to chat with us. I want to start with understanding what exactly is happening in the markets right now, because of course tomorrow is the big event, budget day, but there's also FOMC meeting where a fair amount of interest lies among investor folk, and of course the host of developments around Adani Group companies. So do you think amid all of that the budget could be a bit of a non-event?
Yeah, good morning. I think budget would definitely have a lot of attention for the kind of expectations people have, particularly in terms of what sort of capex one can really expect for the overall economy, and more importantly, any changes in the tax regime. So that is something that definitely will be very keenly watched out. But yes, what you're saying is right, that because of the kind of relentless selling that we have seen in our markets in the last 2 months, and also the Adani saga, the way it has really played out, there has been a lot of volatility and nervousness amongst investors, and India has been underperforming in a big way. So that is something that the market will definitely have to negotiate with.
Okay, fair point. But let's talk about the overall FII trend, because if you look at January 2023, FIIs have sold $1.6 billion in Indian equities year to date this year. Talk to us about the trend going forward. Is it likely to be this way, especially that now the China market has opened up? Could some amount of interest move from an EM like India to perhaps China and other Asian equities?
So just to give you data point, this month itself we've seen outflow of almost about $5 billion, and December and Jan put together we've seen outflow of almost about 50,000 crore. And if you look at the data for smaller markets versus India, like Korea and Taiwan, this month itself, Korea has seen a net inflow of more than $5 billion, and both these markets are up almost about 10%. So clearly the data and the market performance suggests that the money is moving out of India into the other markets, be it Korea, Taiwan, China, and some other emerging markets. And it's hard to really take a call on what's really driving this and how long will it continue. But our sense is that we have reached a point where a large part of the pain is behind us. Adani saga hopefully would get over very soon once we have some development on the FPO front. So we do see some stability and bounce back if we have no major negative surprises in the budget.
Yeah, in fact, I was, also trying to talk about the underperformance that Nifty and Sensex have seen in January specifically. Is that underperformance likely to continue, or is it just an impending sort of profit taking that's happening in the markets right now, and we will once again go back to the strong momentum that we saw for a significant part of 2022, wherein despite all the mayhem that was happening in key global markets, India continued to at least relatively outperform?
So our take is that global markets, emerging markets, there is certain amount of catch-up because 2022 India did much better than most of these markets. And now we are at the receiving end of that. But looking at the earnings picture, this quarter has been reasonably good, and we do expect overall stability on the earning picture for this year and next year. That would be a big, important factor. And apart from that, once you see stability in the global markets and the volatility subsides, definitely at some point the flows will return back to India. So we do not see this 2 month as indicative of the trend for the rest of the months. I think the valuation wise, we were a little higher, and maybe there is some sort of a correction on account of that. Overall, we continue to remain quite upbeat on the market from a medium to long term perspective.
Okay. And what do you make of the earnings that have been delivered so far? Because most people we have interacted with on Moneycontrol have expressed a tad bit of a disappointment, because overall the report card for India Inc. has been a little lackluster.
Numbers have been pretty much decent across the pockets like auto, banks, and IT. We were hoping that these three sectors will contribute to large amount of upgrades and growth for the Nifty companies. I think for these sectors like metals or telecom, pharma, there can be some disappointments here and there. But broadly, from the numbers that have been announced so far, we think that they are pretty much in line with expectations, and we continue to use this any significant correction in the pockets like banks as a buying opportunity, given the fact that the overall earnings for this year is going to be extremely good for banks.
Okay, so again, I guess another good year for banking is something that we should keep on our watch list. But from a market standpoint, Hemang, before we let you go, what is it that you will be looking forward to in the budget speech tomorrow, or the fine print?
We think that there would not be any major disappointments from a capital market or corporate sector point of view, given that after a long time we are seeing a revival in the capex. The banks' balance sheets and the overall performance has been quite good, and there is a perceptible slowdown in the consumption, particularly from the rural side. So I think government would not do anything just to create some sort of a negative sentiment for the overall economy. And even the taxes front, there are a lot of debates and talks whether there's going to be any changes in the capital tax regime or STT for that matter. We do not think there is a case for that. But if we do not have any negative surprises, definitely it will be viewed extremely positive by the market.
Okay, great. Then we all look forward to what the finance minister has to say tomorrow as part of the union budget speech. Hemang, thank you so much for joining us and helping us understand what's the mood of the market right now. Just one day to go for the budget. Let's touch base with our second guest and talk about the technicals of the market. Richard Jain is here with us. Richard, what kind of an action do you expect today ahead of the budget on the market?
Yeah, hi, very good morning, Karuna. Well, Karuna, if you look at last few trading sessions, that 17,750, 800 was a very important support for the market, which was broken during last week. And if we look at the FIs figures, then the main reason for this recent sell-off has been the selling by the FIs, that they have continuously sold equities in the cash market, and they have been on the short side in the index future segment too. Now the index future segment, the long-short ratio is quite low, around 12 to 15% range. And during last year in 2022, we saw that the short covering from FIs came when the long-short ratio came down to these 13-14% levels. So I think the setup is a bit oversold over here. On the lower time frame charts also, we think that since the markets are oversold, any positive trigger from the budget if comes, then lead to some short covering by the FIs. So as of now, we are advising our clients also not to create much short positions over here, but rather look for buying opportunities if we get any declines towards that 17,400, 17,350 range, because the risk reward ratio for taking contra trades becomes favorable over there. So around 17,400, I think one should initiate fresh long positions, keeping a stop loss somewhere below 17,270, and expect a pullback move towards 17,650, 700 again.
Okay, all right. Let's talk about some individual stocks in focus as well. And the top of the list will, of course, be Adani Enterprises. Abu Dhabi's IHC is going to be investing $400 million in Adani Enterprises FPO. The 20,000 crore FPO, remember, was subscribed just 3% on day 2 of bidding, which was yesterday. But let's talk about Adani Enterprises. Yesterday, after the management commentary hit the market, we saw a good recovery, or a good, at least a U-turn of sorts come by on the stock price. Of course, it has still some lost ground to recover. But let's talk about what happens from here on. Adani Enterprises, what is the forecast on the chart?
So quite a different structure we have in Adani Enterprise compared to what we usually or what we see in the normal market scenario. So I think this sell-off has been seen with very high volumes. So of course the volatility is expected to remain high. If I look at the options IVs in Adani Enterprise, they are somewhere trading above 90 levels, which indicates that we are likely to see that large swings on both the sides in the stock. So technically, frankly, it's very difficult to catch the exact levels from where the stock would either start again showing some decent pullback move. But the support for the stock is placed in the broad range of 2,600 to 2,700. Even yesterday, we saw that the stock tried to show some pullback move from the 2,700 range. So I think from here on, volatility would be there. But 2,600 to 2,700 would be a good range where the stock may find good support base and try to make some pullback moves again towards that 3,150, 3,200 mark.
Okay. All right. Important levels to watch then if you're invested in Adani Enterprises or plan to do so. Meanwhile, LIC was also in focus all of yesterday, and in fact, we've got some comment there. The company, or the insurance behemoth rather, says that the market value of Adani Group companies, the equity that they hold, stands at 56,142 crores versus the purchase value of 30,127 crores. Now, their total holding under equity and debt in Adani Group companies is 35,917 crores for all of the Adani Group companies as of December 2022. Now, how's LIC's chart looking, and will it continue to see some more pain before it sort of gives any near-term rewards?
So post-listing, the stock has already seen a decent price-wise correction. And of late, in last couple of months, when the stock corrected towards that sub-600 levels, we clearly witnessed a good buying interest at that lower levels. So I think in spite of this correction recently, if the stock again goes towards that 600 mark, we would again see some buying interest coming in the stock. So I think definitely some short-term corrections would be there, some short-term underperformance could be there in LIC because of the news flows which are going on related to Adani. But if the stock comes again towards that 600 or sub-600 zone, certainly I think traders or investors would look for buying opportunities in that stock.
Okay, fair enough. Let's talk about the next stock on our list, which is Ultratech Cement. Its arm is going to be acquiring stake in Oman's Duqm Cement Project International, and this will be a 70% stake that they will buy in the company for $2.25 million. Now let's talk about Ultratech Cement and its chart. I mean, cement stocks also have been pretty much the cynosure of all eyes, especially Ambuja Cements after the news flow that has been hitting the street on Adani Group companies. A lot of interest in cement as well. So where does Ultratech Cement stand?
So even before the news broke out, Corona, if we last 15 or 10 or 15 days itself, the cement space has already started a corrective phase. Ultratech Cement post its results. Now we witness a corrective action from the higher levels, and even the other cement stocks had already started their underperformance. So some short-term underperformance or some short-term corrective phase would be there. But if one has to be very specific, then Ultratech Cement definitely could stand out from mid to long-term perspective, where this correction could be used as a good buying opportunity. So I think some short-term volatilities or short-term corrective phases could continue, given that the momentum readings are still not in the buy mode for most of the cement pack. But certainly, if I look at the previous up move, then it was a good impulsive up move, which indicates that this correction which is going on, this could be just a corrective phase within a broader or mid to long-term uptrend. So one can use this correction as a buying opportunity, but certainly one needs to have a good patience for the rewards to come in for this cement space.
Okay. Let's talk about some earnings candidates as well, some heavyweights on the list. Larsen and Toubro Q3 profit jumped 24% year on year. Revenue also rose a healthy 17%. Order intake was up 21%. They saw improved execution in infrastructure projects, growth momentum in IT and TS portfolio as well. Now, L&T last 2.5 months, extremely flattish moves, extremely range bound, very, very sluggish. Will the trend change anytime soon?
I think yes, the downside seems to be very limited for this stock. Primarily, last 2 or 3 months, the stock has witnessed price up moves which were supported by rising volumes. While if you look at the volumes on this price corrective phases, then the volumes are not much higher when the prices are going down. So this clearly indicates that the previous long positions which are formed in the stock are still intact, and this could lead to good buying interest by market participants when the stock comes around the support level of 2050, around 2050. So I think 2050 remains a good support for the stock. Any declines towards that support area could be used as a good buying opportunity. So buy and dip strategy should be kept for Larsen and Toubro.
Okay, and how about Tech Mahindra, another big name to watch out for? They delivered their earnings last evening. Q3 profit was up 0.9% on a sequential basis. Revenue rose 4.6%. Operating numbers have beaten estimates. Dollar revenue is up 2% QOQ. CC revenue growth is about 0.2% as well. Now, Tech Mahindra again very sluggish last several months now. What do you expect from these levels?
Yeah, so if we compare Tech Mahindra to other heavyweights, then we can clearly see a relative underperformance compared to TCS or Infosys or HCL Tech. If we compare from Tech Mahindra, and I know the way yesterday we have seen a correction in the Nasdaq index. So I think our markets of late have been following more of, at least IT space is following more of what is happening in the Nasdaq. And we need to see how the market reacts to these Nasdaq corrections which were seen yesterday night. So I think I would be on a wait and watch mode as far as going long on the IT space is concerned, because the stocks have already seen a decent pullback move of late. And in case if we see a meaningful correction getting continued in the Nasdaq, then I think some correction within a short term could be seen in the IT space. So it's better to wait and watch. On the lower side, 950 to 1000 remains a good support for Tech Mahindra. So in case if the stock comes in that range, then I think ideally the risk reward ratios become favorable to take some contra buys over there.
Okay, all right. Let's get going and talk about some stocks and comments as well, and queries coming in as well, which our viewers are posting live on our YouTube feed. The first one on the list is Basavaraj's query. He purchased 73 shares of HDFC AMC at 1921 rupees. The stock has been falling, but he is a long-term investor, so he's willing to wait it out. What do you think he should do at the current level? Should he stay put or average more, or are you still cautious about an HDFC AMC?
I would advise to hold on the existing positions and not try to average at current levels, but any dips towards that 1700, 1740 mark if comes because of this market volatility, then those ideally would be good levels where he can look to average out his positions. But as of now, the stock has already seen a correction recently from 2300 odd levels, and on the downside, good support is coming around that 1740, 1700 range. So hold on to your existing positions. Since you are not a short-term trader, you are a long-term investor. So I think this volatility, you should not look much into this volatility. But rather, if it comes near those supports which we mentioned, then ideally those would be good levels to average out.
Okay, all right. Arun wants to buy shares of Jubilant Foodworks at the current levels. Again, he's a long-term investor. So he's asking your advice on whether he should enter now or wait for a further dip. Already, if we look at the stock price, it has cooled off by 150 odd rupees in the last 2 months, 2 to 3 months, in fact. And it continues to fall. Do you think 485, 486 is a good time to enter, or should one wait for further decline?
I think one should wait for further decline because post the announcement of last quarter results, we have not seen any kind of buying interest coming in the stock. Even when the markets were going up, where we witnessed a good pullback move in the broader markets or broader mid-cap space, at that time too, the stock was showing some relative underperformance since last 2 or 3 months. So major support, if I look at the weekly or the monthly charts, is coming somewhere around 450, around 450, 455. So if the stock shows some reversal signs around their previous lows of 450, then I think those ideally could be good levels to look for buying opportunities. But for now, I would wait at least for the volatility to settle down, since it has been an underperformer of late. So around 450, where he can again take a review on the stock.
Okay. Our next viewer, Raja, is asking about SpiceJet. He is asking if there's any chance of a revival in the stock price. Again, it has been a one-sided downward move for SpiceJet last 6-7 months. Of course, the quantum of losses is still in mid-teens. But do you think it could see any rebound or a bounce back anytime soon?
Not frankly, the structure is not much positive for the stock. Even if you compare it with Indigo, which is other listed company in the space, then last couple of months have been good for Indigo when the crude oil prices had corrected. That stock witnessed a good buying interest, but at the same time, we did not see any kind of higher volume activity or higher buying interest coming in SpiceJet. So this clearly indicates that even if investors are looking for buying opportunities in this sector, then the preference is going more with Indigo rather than SpiceJet. So I think one should avoid any kind of bottom fishing in this stock.
Okay, all right. Moving on to our next query. This is from Funny. He wants to know about GE Shipping. How is that looking on the chart?
So some short-term volatility could be there, but mid to long-term charts are quite positive. In fact, last 1 year, we have seen a good buying interest in the stock, where whenever corrections are coming towards its 100 or 200 or 200 EMA, the prices are witnessing a good buying interest at lower levels. So I think one should continue to hold on the existing long positions. On the lower side, support is around that 590, 580 range, and on the higher side, 670, 675 is the immediate short-term resistance. But the broader structure is still positive for GE Shipping.
Okay, all right. Rishi is asking us about IRCTC. In fact, I saw a couple of more viewers who have been asking us about it. Ashok is one of them as well. Okay, so let's talk about IRCTC. Now, PSU stocks have had a dream run, especially in the latter half of last year. IRCTC failed to participate in the rally. In the last 1 year, it has in fact given up more than 25% on its stock price. Railway stocks also saw a brief comeback and a brief uptick. Even then, IRCTC could not participate. So let's talk about what's happening in IRCTC and why the stock continues to languish.
So if you look at recent price volume action, then clearly on every pullback moves, it is not even able to surpass its 20 EMA. Post that results which is posted last quarter, the stock entered a corrective phase, and that underperformance still continues. We are not witnessing a close above the 20 EMA, which is a very short-term moving average also. So I would tend to avoid unless we get a closing about that 20 EMA on the start. Rather, if one has to look for any kind of railway stocks for mid to long-term perspective, I think Econ International could be a better choice than IRCTC. So unless we see a change in structure in IRCTC, it's better to wait and watch in the stock. And Econ within this space could be preferred for buying at lower levels around 54 to 52 range.
In fact, we're getting a query on RVNL as well. Since we're talking about IRCTC, if you could also pull up a Rail Vikas and tell us how that's looking.
Structure for RVNL also good. Some short-term corrections, even if it comes, then I don't think the stock would have no major downside as far as price moves are concerned. We have seen that whenever that momentum readings are going into overbought zone and have been correcting, the stock is showing more of a time-wise correction rather than any sharp price correction. And also, if you look at the volume action in last 6 months, then the volumes have been quite high compared to what we earlier used to see in this railway stocks such as Ircon or RBNL that we are talking about. So I think one should continue to hold on to the long positions. There could be some time-wise correction until the market sees a resumption of the uptrend again. But once we see the markets resuming its uptrend, I think RBNL stocks such as RBNL and Ircon are likely to again show some good outperformance.
All right. Very quickly, last and final query for the day. Manish wants to know about Bajaj Electricals. Again, this one also has given up 10-11% in the last 1 month. Is the downward trajectory likely to continue from here on, or do you see any kind of a revival?
So I think more consolidation is going on the stock. If you look at last 3 months, whenever the stock is coming around the 1250, 1270, we are witnessing selling pressure, and lower levels around 1000, 1050 has been acting as a good support. So this entire broad 200, 250 points range, so it seems to be a more of a sideways, or I would say a broad time-wise corrective phase which is going on. So if long positions are there, they could be held on. But if we are looking to enter into the stock, then I think any dips towards that lower end of the range, 1000 to 1040, I think that should be ideally good range, because the risk-reward ratio would become favorable for taking contract trades over there.
Okay, and Richard, what about your preferred picks in the market right now? Big day tomorrow, so ahead of that, what kind of stocks should one look to dive into?
So as of now, not going much aggressive until we see any good buying interest and a post-budget. But SRF is one stock which is looking good over here. Yesterday, the company announced its results and the stock witnessed a good bounce back from its support level, because ahead of the results, we have already seen some price-wise correction which was there. So the stock is trading around good support on the weekly chart. So at least for a pullback move, one can attempt going long on SRF with a stop loss below 2085 for probable targets around 2270.
All right. Okay, Richard, thank you so much for joining in and sharing your thoughts with us on the markets and helping our viewers out with a host of their questions and queries. On that note, we're going to wrap it up right here on Morning Trade. Thank you for tuning in.